Hey everyone, I hope you're all doing well. I just wanted to go over a few charts just so we have an idea of what's going to be going on next week. Now, obviously, the economic calendar is actually pretty packed, but then there's also some other external events, namely the situation kind of developing in Russia and Ukraine, and just some other geopolitical issues right now. So we're just going to go ahead and take a look at SPY, QQQ, IWM. I'm just going to show you the critical levels of support and then also resistance that we need to watch out for. We're going to go over a few possible scenarios, and then we're also going to take a look at Bitcoin. This video is actually going to be pretty similar to the one that I did last week on Thursday, but it's just going to be a little quicker, a little bit more concise, and we're going to go over basically our trading plan, and I'll show you actually two of the positions that I've gone ahead and entered. Okay, so first up, we have SPY on the daily chart. So as you guys remember, I was talking about how we needed to hold above basically this 200 SMA on the daily. Well, we did not do that. We broke below it. And if we go to the 4-hour chart, we can see that essentially this pennant that we had formed clearly broke below. We were able to kind of retest near the highs of it, but we never broke above it. And so we're continuing this downtrend. So really, here's kind of what I'm expecting for next week. Right now, it looks like as it stands, Ukraine and Russia are going to be involved in some sort of conflict. Right now, there's been a bunch of proxy militias and separatist groups kind of inciting some sort of conflict in the east. And it looks like a no-fly zone was established near Crimea. So that's going to be a little bit shaky. Really, personally, for me, I really don't want to see any kind of armed conflict break out because I don't think it's going to be beneficial for anybody. Innocent lives are going to be at risk. So, if to any of my followers, if you're from Ukraine or involved or know anybody involved, my heart goes out to you, and I hope everyone's okay. So really, the key level to watch here is going to be 431.85. This was a level we bounced off of last week. So if you guys remember, I had talked about how I had entered a put on the 11th, and I actually closed out that put right when we bounced off of 431.85, and we took 54% on it. That was about a $375 return on that contract. But once we hit 435, I actually re-entered another position because we did not break. So the put I actually entered is all the way out for, I believe, it's either the 4th or the 2nd of March. And I went further in the money on this one. I actually went with a $438 strike price. And the reason why is because obviously the market is just clearly reacting to headlines right now and the situation developing in Ukraine. So if there is, good news, then I think we could see a little bit of a pump. And so I didn't want to go out of the money with contracts because I know those would be very susceptible to these volatile price swings. And obviously, if the direction goes against the one that you chose, then you could take a pretty significant loss. So last I checked, those contracts that we entered, I actually just entered one, and it's the 438 put for March 2nd. And last I checked, it was up about 15%. So some people in the group took profits right at that 15% level. That was about $130 in less than an hour. So that wasn't too bad of a trade. But really, the reason why I entered this put is not just because of the situation, obviously the potential war situation, but also just because right now it seems like the market is looking for some sort of clarity, and there isn't any sort of clarity in regards to, inflation being curbed. And so really everyone's just waiting until March, right? Because that's when, if we go right here, right, from the FOMC, they talked about how they're looking like they're quote unquote ready to raise rates and shrink the balance sheet soon, but they actually didn't really announce anything different than before. And so obviously you have some people, right, like the St. Louis Fed president, James Bullard, he's a little bit more aggressive and hawkish. But at the end of the day, you know, even if they, raise rates by like 1.75 percentage points, you have to ask yourself how much of it's already been priced in because a lot of things have already sold off the last few months. But that being said, The key level to watch here is 431.85 on SPY. If that breaks, the next level that I'm probably looking at is going to be about 429. So most likely what would happen is this would break. We'd probably go straight to 429. 427 is kind of a level, is another level of support, but I'm not really counting on that so much. It's more just 431 is the big one. 429 is the kind of like an intraday support I'm looking at. But the big level of support to watch is going to be 420.78. If we break below 420.78, we go ahead and add an alert for it. Okay, 420.78. Then we are probably going to be going lower. And I would actually be eyeing levels most likely. I'd probably be eyeing low 400s. So that's just kind of what the chart is telling me. So 431.85 and then 429, 427.49, another level kind of watching. But the big one is 420.78. The question here is going to be, are we going to have a double bottom or are we going to break below? If we break below, then yeah, expect SPY, I think, to go probably to 400, 410. Okay, so next up, we're going to go ahead and take a look at QQQ. So this chart is quite a bit more bearish. Reason why is because we aren't that far off from our previous low. So right now, our RSI is 37.72. So our RSI is not even oversold yet on the daily. So we have quite a bit of room to work with. And really, I think we could form a higher low here, but this is going to be a very, very interesting week. Do I think that's going to happen? I don't think it's the most probable scenario. If we do manage to form a higher low this week, then, maybe bulls have something to work with, right? And we might be able to try to retest 347 and hold it and then maybe kind of work our way up. But most likely what I think is going to happen is we're probably going to test 334.15. So that's the level I would watch, 334.15, set an alert for that. If we break below that and we don't hold, our next level of support is most likely going to be 324.34. Now, how am I getting that level? I essentially am just looking at areas where historically there has been a level of support and resistance, and 324.34 appears to be that level. Now, here's what I would look out for. If SPY and QQQ are both moving lower, and let's say SPY breaks below 429 and QQQ breaks below 334, then the most probable scenario is going to be SPY hits 420 and QQQ goes to 324. So everything's kind of moving in tandem. Really just keep an eye on the correlation between these different indexes. If SPY and QQQ are both moving down at the same time, that is your time to be bearish. If SPY is holding relatively stable, but QQQ is kind of faltering, then I would be a little bit more neutral. I'd be slightly bearish, but a little bit more neutral. If SPY starts to turn green and QQQ starts to flat, that's kind of when I would be looking at, okay, maybe I could play the bullish side of this as well. So that's just kind of some cues to keep an eye out for. Okay, so let's take a look at IWM. So Russell 2000, we broke out of this inverse head and shoulders, but we failed to break above 209, as discussed. Anyways, right now we're coming down and we're testing the bottom of this neckline, and it looks like we're probably going to break through it. So this inverse head and shoulders, I would argue, is probably now void. Now, the next level I'm watching is simply at the bottom of this right shoulder. So that's about 193. I believe I have an alert set for, let's see, 194.31. Yeah, I have an alert set for 194.31. If that level breaks, I think, and we see some broader market weakness, then I think we're definitely going to 188.14. That would be our 100% retracement. Now, if that level breaks, The next level of support I would probably watch would probably be around 185.5. So 185.5 is the level to watch. And again, how am I getting that level? If you zoom out and you look at levels of support and resistance, 185.5 is that level. Okay. So one more thing to note, I don't really trade IWM. The only real trades that I take are usually just SPY or QQQ or individual names. I only use the IWM just kind of as a gauge for whether or not growth stocks are in a position to essentially move higher or lower. So right now, when I see IWM kind of struggling, that's kind of raising some red flags for me, saying, okay, IWM is struggling, but so is the broader market. So I think there is a little bit more room for pain. Okay, VIX, there isn't really a whole lot to say here. I'm just really watching on the daily chart here. I'm just watching for these lower highs that are forming, but we are forming a tightening range. Now look, here's what's going to happen. If an invasion is confirmed, and it does happen, I think we're going to see VIX probably spike, probably to about 38, maybe higher. But very quickly, I think the market is just going to digest that, and soon that element of uncertainty, I think, will kind of go away. And I think we're going to probably see VIX probably drop pretty significantly as well. So if you're playing, UVXY or VXX or any of these, instruments, basically, if there is any sort of news and there is a spike in volatility, sell into strength is what I would say. Okay, so we're just going to go ahead and quickly take a look at Bitcoin, because this daily candle that we got, so right now we're about 20 minutes into the next day, right? Because we're moving on UTC, right? I'm Pacific time, so I'm 8 hours behind. But we're starting the next day here. It's a little too early to tell what's going to happen, but this daily candle was not the strongest. And actually, it is quite bearish. So, as you guys know, I was calling $40,000. I was convinced $40,000 was going to be the bottom. That did not turn out to be the case. We broke below. So, really my strategy for Bitcoin is pretty simple. I think the math checks out. I think the fundamentals are incredible. I believe in Bitcoin. I see the vision. I'm, long on this. So I can wait it out. So this is kind of something where I'm just going to be focusing on accumulating. So I'm just really going to be adding at, levels of support that I see fit. I think $35,000 would not be a bad level to add. But really, what I'm looking out for is on the weekly chart. Because if we can test this 100 SMA on the weekly, which is right around our 61.8% retracement at $32,000, which coincidentally is also right where we bottomed the last time we dropped this low, then I think that's going to be a pretty strong level of support to buy at. And, definitely people that were inching to buy Bitcoin, but, weren't able to when the Bitcoin was in the 50,000s and even the 60,000s. I think that $32,000 is, historically speaking, a very, very strong level of support. Back in, what was it, May through basically July, we were kind of in this huge range between $40,000 and $28,000. So, I don't see how this time is any different. Maybe our range is going to be 45,000 and 33,000. Who knows? But that's just something I'm keeping an eye out for. Now, in terms of on-chain analysis, things I'm going to be watching are whether or not we see, big whales, like big amounts of Bitcoin kind of like move onto exchanges or off exchanges. If suddenly you see like $8 billion worth of Bitcoin or something gets moved onto an exchange, then that's kind of a sign to me that, oh my gosh, okay, someone's about to dump and, do some manipulation here. So that's just kind of something to keep an eye out for. But really, my thesis has not changed at all. And I know there's a lot of people that are kind of hurting in the broader crypto space right now. But if it's any consolation, between 2018 and 2020, quite a few people were down because of the peak in 2017. But anyone who dollar cost averaged between those 2 years is up on their investment in Bitcoin or Ethereum. So, this time, this could be our chance to dollar cost average. That's just what I'm going to be doing. In the Discord, I've been telling people, okay, here are some levels we could go lower, but the conviction hasn't changed. I still remain completely bullish on them. And it's just going to be a waiting game, essentially, at this point. It's just buying, accumulating, and really just waiting for these things to take off, because they will. Now, obviously, 95% of crypto projects, we can argue are kind of, for lack of a better term, kind of bad, junk, shit, whatever. But the few very, very strong projects, I think, are going to remain. And I think this time, where there's kind of a market downturn, crypto winter, whatever term you want to call it, is really where the wheat gets separated from the chaff. So invest in quality, and you will be rewarded, is what I will say. So that about concludes everything. I am going to be making more of these videos throughout the week. Now, obviously, we do have some events coming up. Let's go ahead and take a look at the economic calendar. Okay, so scroll down. Okay, so obviously, as a reminder, tomorrow is President's Day. It's a holiday, nothing going on. If I were you guys, just set your limit orders, maybe glance at futures, but really just spend that time away from the screen. Weather has been beautiful. Spend some time outside. Just kind of take a little break if needed, because obviously we're going to be kind of glued to the charts for the next few weeks. So it's always good to kind of spend some time away from them, at least for a little bit. That's just my opinion. But anyways, so Tuesday, all right, we have Case-Shiller Home Price Index, PMI for market manufacturing and market services, Consumer Confidence Index. That's going to be interesting. Thursday, we have initial jobless claims, and then new home sales are kind of what I'm going to be keeping an eye out for. Now, Friday is going to be a big day, because Friday we have quite a few things to watch here. We have PCE inflation, core inflation, year-over-year inflation, consumer spending, and 5-year inflation expectations. So there will be a lot of stuff to keep an eye out for, okay? It's going to be a busy week, but don't worry. I'll be here. I'll be making content. I'll be watching the charts. So, we'll all get through this together. But basically, if I have to sum up the video, really it's just there is a bearish cloud over the markets. I'm aware of that. I'm hedging my portfolio. Right now, this is a trader's market. I don't think this is necessarily an investor's market unless you have a broad 5-year time frame and you are okay dollar cost averaging and kind of being in the red for a while. If you're okay with that, then sure. Dollar cost average, pick quality, and you're going to be rewarded. But if you know that this is, it will cause you a lot of stress to see your portfolio fluctuate by 10, 20, 30%, and knowing that things could go lower, maybe this is a time where I would sit it out. I would just study. I would do my research and identify possible entry points, areas you're comfortable, amount of capital you're okay, risking and allocating towards stocks and cryptocurrencies, and make a game plan. Is really what I would do. Sometimes the best trade is no trade. There's nothing wrong with that. You just do what's right for you and what's right for your investing goals. How I'm going to be playing this is I'm just going to be trading. That's literally all I'm going to be doing. I'm just going to be trading, raising cash, and as long as I can do that, then I will confidently dollar cost average and buy the dips. That's kind of my plan. It's pretty simple, pretty rudimentary. So that's how I'm going to approach things. Now, if you guys want access to my trade alerts, I post everything live in the Discord. Click the link down below. You get a free 7-day trial. you get access to everything. You also get access to our position tracker. So I'll go ahead and actually show you this right now. So every single trade that we make, we post here. And so as of late, these are the trades that I've been taking. So mostly it's been day trade. And so how we essentially track everything is we use model portfolios of $10,000 for day trades, swing trades, and then our leaps. So essentially think of it as starting with $10,000 and then you kind of work your way up from there. And we think it's a good way to gauge everything because, we don't want to utilize more than, 10 to 20% of our capital per trade. So that's kind of, it allows us to build a realistic portfolio and show people that you can generate, a realistic return, because it's not really right if you essentially have a portfolio and, you can show people, oh, hey, look, if you took all of our trades, then you're making over 100% on this trade, right? Like you don't want to put $10,000 all in a trade at once. And sure, you could double your money, but you could also risk it as well. So how we're approaching it is you have $10,000, you don't take more than 10 to 20% of your capital per trade, right? And so you kind of work your way up from there. That's really how I'm approaching it. And you can see, for example, we have the contract, the entry price, the number of contracts, total cost, percent portfolio risk, exit, profit and loss, the chart from Discord, stop losses, targets, and then whether or not it was a success or a fail. And then also just some notes. So everyone in the Discord has access to this. You can always see essentially what works and what doesn't. So for example, we took, for this last week, I did about 3 day trades. And let's see, I did 3 day trades. One of them was successful, 2 of them weren't. And I explained what went wrong, what went right, and all of that. But we also did some swing trades, and we had a successor. Now we obviously have another open position there that we're gonna have to reevaluate. But yeah, I mean that one was successful. Let me go ahead and actually color that green. So basically, we always want to be transparent about everything that we buy, everything that we sell. And so this is kind of a way for you to track our performance, and it's a way for us to really, keep ourselves accountable. So it's definitely something that took a lot of time to make, but we really pride ourselves in having this spreadsheet. So that's kind of how the Discord works. If you want more information about it, we actually did make a video kind of explaining all the different aspects of the Discord. So I'll go ahead and link that for you guys as well. So we're going to go ahead and wrap this up. Enjoy your President's Day tomorrow. And we're going to get through this all. It's going to be okay. We have our plan. We have our charts. And we're going to be driven by data and not emotion. So I'll see you all next time. Take care.